Hey everyone, welcome to another episode of Punch Card Investing. We are live for, I believe this is our 17th week. So it's kind of nuts that we've been going for this long and we have no plans on stopping. Don't worry about that. So before we even get into today's topic of Alibaba, which it's been a bit overdue at this point, given how many people are buying into it. Before we get into that, be sure to subscribe if you haven't already, because we put out a new video every single week. We try to do the same time every single week, and we wouldn't want you guys to miss out on that. Be sure to smash that like button if you enjoy this sort of content about value investing, or if you just want to help the channel out. We'd appreciate that. And check out the Discord while you're at it in the description below. But otherwise, let's get into Alibaba. It's been a very hot topic in the value investing world. Seems like every value investor on the planet is buying into it. It seems like, at least those super investors that we tend to follow on this channel and on our respective channels as well. I can go ahead and pull up the Dataroma over here. There we go. Let me zoom in a little bit. Here's a list of some of the super investors who've bought into it. One of the pioneers, I suppose, in this wave was Charlie Munger, which is a very unusual one, seeing as though he makes very few actual individual investments through his investment vehicle of Daily Journal. That was a big move, and then it seemed like that set off this tidal wave of value investors that's continued to where Guy Spier just announced that he bought into it in the last quarter. And he's also a relatively, I don't want to say inactive, but usually it's very noteworthy when he makes a move. And he made a move into acquiring some Alibaba recently. And he is not alone, as you can see by this list, and among many others. What are your guys' thoughts on this? This has been a pretty unusual trend. Have we seen something like this with a particular stock in the value community in even the near future or in the near past?
There's a couple I can think of. One of the things that concerns me a little bit is the last time that Guy Spier, Monish Pabrai, and also Phil Town were in a stock, I think it went to zero, which was Horsehead Holdings. So hopefully this isn't going to be a repeat.
That would be something if Alibaba went to zero. It's already a huge company. I think that seems to be pretty unusual in that it's such a large company that typically with some of these smaller value guys, they go for smaller micro cap type companies that could produce really outsized returns. I wouldn't expect super outsized returns by Alibaba. Not that they wouldn't do well, even if all the assumptions are true that they continue with some pretty substantial growth. But you're not going to see like 1,000% return most likely compared to maybe a micro cap or something like that. But still, it is unusual. What about Micron? Didn't quite a few get into Micron? We have a couple in Seritage, but not nearly to the scale of this.
Mm-hmm.
I think it was Micron, and then before that it was Apple. Apple in 2016. Yeah.
Yeah.
I haven't seen so many value investors. Yeah.
Before that, it might have been Valiant. I'm just bringing up all the bad ones for you guys.
Are there any people on this list that you're either surprised to see or that you're expecting to see in the near future? Obviously, we don't see the GOAT on here, Warren Buffett or Berkshire. And we'll see if we do get that in the next quarter. I'd be a little bit surprised maybe, but anyone on this list that's surprising?
I think the main surprise to me was probably Charlie Munger. I really didn't see him making any major investments really before ever again. So to see him investing in a Chinese company and betting fairly big on it, in comparison to the Daily Journal portfolio, I guess to his overall investments, it's a minor part of his net worth, I guess. But yeah, I think that was probably the most interesting one to me. Monish isn't much of a surprise, and if Monish buys, I'm not surprised that Guy Spier buys. So those two obviously share a lot of the same portfolio. So those two are not surprising in my mind. But yeah, probably Charlie Munger for sure.
Yeah, and this seems like pretty standard operating procedure to me, with like Monish bets 10 or 20% of the fund on it. Guy Spier bets about a third of that allocation on the same company. And I expect if Pabrai ever does sell it, Guy Spier is probably going to hold it like 3 times as long as well. That's the general way these things play out. But I'm really interested to see what Li Lu does personally at Himalaya Capital. Because yeah, Charlie Munger's had money basically in China via Li Lu for a long time now, and I know Li Lu was invested in Alibaba at one point, but he sold out in late 2020, I think it was.
Yeah, I think Li Lu buying would certainly. He's the most respected investor for that region anyway. So if he does buy back into Alibaba, that would be a great sign. I would think that Charlie Munger was heavily influenced by him, or at least talk this through with Li Lu a lot. So it would be weird to me if he didn't buy back in at this price when he was willing to pay a much higher price. Probably concerning slightly if he doesn't buy back into it, in my mind.
Yeah, potentially. I mean, Charlie Munger. I wonder if Charlie Munger's almost making like a more general bet on China, whereas Li Lu's maybe a little bit more in the weeds. So I wouldn't be that surprised maybe not to see Li Lu buy it. Potentially he's going to buy something a little more obscure that not everyone's looking at so much, but who knows?
And then there's a couple that aren't on this list as well. So Tom mentioned Phil Town before, and Ray Dalio, I think, owns about a 3 or 4% position.
Yeah, he does.
Baba as well.
And that was from a while back that Dalio bought in. I think we're approaching a year, if I'm not mistaken, that Dalio first made a pretty significant move into it. Among, I think, some other Chinese moves or a lot of emerging market sort of ETFs in his super diversified sort of approach.
Yeah. And guys, I think we're also missing some guy called like Brad something or other.
Oh, I forgot to mention that at the
Investing
intro.
with Frank Ganani, investing on Tom. Are you in Alibaba as well, Jack, or not?
I am. I have a small position that's kind of carried over that I'm now tempted to add more into because the price just keeps getting kind of beaten down. So it's like, I mean, even if it's not going to be like a massive 100 bagger, like you could still get to some pretty sizable returns if you're willing to look past some of the risks that have perhaps driven some of the price decreases in recent months, especially. But before we get into that, I should mention that Brad will be back. I see there are some concerns in the chat that he's gone solo. He is not. He is actually on his way back from his vacation, to which he has been out the last 2 episodes. But he'll be back for the next one, so don't you guys worry. Brad will be back, and I'm sure he'll have plenty of good Baba content coming up, anyways, on his own channel. But anyways, Brad's been in. He cloned Charlie right when that happened, right? He cloned Charlie Munger. Or did he wait for someone else after that? I forget. But he made it pretty
he was right after. He was in right after Charlie Munger.
Yeah, it was right after he made a pretty significant clone relative to
his portfolio. And we get like cheaper than him, so.
Yeah.
Sorry, Brad.
Fortune did not favor the bold there yet. We'll see. I guess since I kind of prompted risks, let's talk about China risks, Alibaba risks, because that seems to be the big thing on everyone's mind. Naturally, I suppose, with China and the regulatory environment in China, but also outside of China. What are other countries going to do? Like the U.S. potentially delisting Chinese stocks. That's been floating around for a while. Nothing's really come of it, but it's significant. I don't know how you weigh that risk, but let's just say a delisting did occur in the U.S. Is that a major concern long term? That tensions between China and the U.S. The U.S. has a very healthy, liquid equities market that would inevitably, I'd guess, prop up most stocks that make their way into it. Is that a major concern long term if you're looking to buy into Alibaba, or do you not really care and just see it as an opportunity to buy more?
I think I kind of take Ray Dalio's perspective on this. So on his LinkedIn, probably about a week ago now, he made some commentary around China and the risks involved with the CCP. He's kind of looking at this time period as just a short-term blip, but when you zoom out a little bit and go over the longer term, he even mentions like a 40-year time period. They've actually been really moving towards becoming a free market capitalist society where these entrepreneur-type people can thrive in China. And if you're looking over the past 6 months or you're looking at the headlines of the news right now, that certainly doesn't seem to be the case. It's just kind of really hammering down on some of these anti-free market decisions, like with the DD listing and things like that come across. And that's really why we're seeing a huge drop in share price. I think Baba's down about 35 or 40% since its all-time high, or maybe not quite that much. Tencent's around the same. The Chinese market in general, if you're looking at any China ETF, it would be down about the same. But I think if we're looking longer term, this is not the trend that China is having. They seem to be supporting these companies. And really, it's what's moving them out of being what was a third world country into a more developed market at the moment. So I would find it pretty hard to believe that the CCP would completely ruin such a huge part of their GDP. I think Alibaba alone is about 2% of China's GDP. So to completely destroy that would be pretty insane in my mind.
I think the delisting might actually be a positive, like if it ever happens, because suppose they do get delisted, right? A lot of the funds in the US would have to sell out of Baba. So that would kind of put pressure on the stock price, and the underlying business would not have changed. Say it'll drop like another 40% from here. Baba goes to like 100 something. There is pretty much a buying opportunity in that sense. I know it looks bad in the short term because you might think that they have less access to that market and capital raising and everything. But I think Alibaba can raise money from the rest of the world, even if they're not listed in the US, like just being listed in Hong Kong.
Yeah, and Alibaba don't need to raise money. Like if you were going to be a long-term shareholder of Alibaba and the price went down, you would directly benefit from that because Baba have been buying back stock and they've just announced they're lifting that from like 10 billion a year to 15 billion a year, which is like, I think well over half of their annual free cash flow they're sort of plowing into buybacks at this point. So I agree with that idea, Karan.
Kind of gives us a glimpse into them being good capital allocators, the fact that they're buying back shares also. So we haven't seen a lot of buybacks from them, but clearly it's headed in the right direction.
I'll play devil's advocate just with accounting fraud as a, I don't want to call it a theme in China, but there have been some notable large examples in recent history, like with Luckin Coffee. And is that a concern at all with something like an Alibaba or really any of these larger Chinese stocks that have really nice looking numbers? If you just look at a balance sheet and a cash flow statement, it looks pretty great. Is that a concern at all for anyone? That it's actually too good to be true because it's not true?
I can have a crack at this one. I mean, the risk of accounting fraud is clearly not zero, and it's probably
right. It's never zero anywhere. To be clear,
it's never zero anywhere, but I think the risks are higher in China. I sort of have like similar thoughts on accounting fraud and the whole VIE structure and all this kind of stuff. And this is a bit of a kind of cop-out answer, but in many ways, I'm kind of just outsourcing this thought process to Charlie and Monish because they're a lot smarter than I am, and they've kind of done the work on it. I think it would be very unlikely that a company as large as Alibaba is doing any sort of extreme accounting fraud, but it's not a zero possibility.
Unless when everyone's copying each other, they're all copying from like one bad source at the beginning, and it just creates this echo chamber. Are we getting to that level with the amount of people getting into it? Is it getting to where like, okay, is everyone really doing their due diligence here, or are we just copying each other? It's like shameless cloning gone awry. Is that a concern as well?
I think it probably feels a bit like that in this little value investing niche. But
Right.
If you were to look more broadly at Alibaba, the sentiment is not positive right now.
Sure.
I think we're probably overexposed to value investors looking for beaten up cheap stuff where they think the market's wrong and making sort of like an arrogant statement with their portfolio and buying up as much of it as they can. So that's my thoughts on the whole thing. But it's been a long time since we've seen this many people. I don't know if I've ever seen it, frankly, since I've been investing. This many people kind of pile into one name.
It reminds me of Frank. You said it was a few weeks back when we did like investing biases and how even within the value community, it's a contrarian approach, at least how we define value investing. That sort of community we're in. It's so it's odd when everyone is kind of doing the same thing, or what feels like everyone. It's not everyone, obviously, because it's you're kind of supposed to be going against the trend. And at what point does it become everyone is going against the trend that becomes the trend? I don't know where that turning point is, or if it really even matters if you're just looking at the fundamentals anyway. But I thought I'd at least point it out because what do you think about this, Frank? Because that was the thing that you focused on in that episode a while back on biases. Are you concerned about that at all?
Not really, only because I think the share price speaks for itself. It's been going down since all of these investors have bought. I think everyone we've named that has bought into it would be at a loss at the moment. So it's not like the overall market sentiment is great towards Alibaba.
Right.
It's clearly the market is fearful towards investing in China and Alibaba. So yeah, it's somewhat concerning. Like, I don't want to just be copying other investors. It's certainly good for these other people to be backing up our thought process, I guess. But as long as that share price is going down, it's not like I'm jumping on a hype train, because at the moment we're jumping on a falling ship. So we're hoping for some type of turnaround and a change in market sentiment that so far hasn't happened yet.
Yeah, I think
Jack,
that's
also with
fair.
Jack, with regards to fraud, I mean, any big company is bound to have fraud in it. Like, for example, Wells Fargo. Like, no one could have even imagined what happened at Wells Fargo would have happened. And, it's highly regulated. It's a bank, but, scandals happen, frauds happen, and that's an American company. So with Alibaba, there's bound to be fraud. But I don't think it affects the numbers because, again, like if we believe the cash that they have, the cash flows and everything, they're substantial. Like, I think one of the best in the world. So I think that margin of safety cures everything.
Bound to be fraud. That's a hot take. Every
Possibly.
company has fraud. I mean,
It's so large. It's so large. Like,
or even not even fraud, but just kind of like, dishonest, massaging the books. Goodwill is my favorite one, where the value that doesn't really go to anything, but it's counted as an asset. Like, that's a classic one, and that's totally legal in most cases, but it doesn't really add any real value. So yeah, definitely got to look at things carefully. And I like what you said about margin of safety. That's definitely the cure all, except when something goes to zero, then then it's not going to do much. But otherwise, for sure.
Yeah.
even
The
with
other thing
regard to sentiment, we've seen like Kathy Wood sell out of all the Chinese stocks. So that's also put like a huge. She does have an impact on the markets. Like,
Oh,
say
yeah.
what you want, she
Especially
does.
among retail, for sure.
Absolutely. Yeah.
And retail inflows are massive right now compared to history. So that's going to play a much bigger role than it might have like 10 years ago, because of just how many retail investors are pouring in. It's a lot of money, whichever way you spin it. Sure, it's not as like coordinated outside of a few notable examples, like mainly the short squeeze space, but it's a lot of money swimming around right now, all around the world, really.
Do you guys maybe want to back up a step for a second and maybe just go through like a bit of a general overview of the businesses of Alibaba, because I know we're kind of all quite deep into it, and I'm sure a lot of the people watching are, but potentially some people like have only ever heard of Alibaba, as I had just a few months ago, as like the Amazon of China, and maybe don't quite understand like what's going on with the business, because it's, the more you dig into it, like it's incredibly complex. And I see we've got one comment in the chat sort of basically saying that you can never fully understand Alibaba, and I would basically agree with that. But I think there's a few sort of general buckets of like kind of business segments that Alibaba operates in that you can kind of focus on at a higher level. Did anyone want to kick that off at all?
Tom, do you want to explain the whole WeChat Alipay, the difference between the two? Because I find that to be one of the most interesting things.
Yeah, sure. So Alibaba has a 1/3 stake in a business called Ant Financial. So one of Ant Financial's main assets is Alipay. There's basically, yeah, the way I sort of think about it, and again with all of the stuff with Alibaba, like I've never been to China or spent time in China, and just kind of taking out as much information as I can and trying to interpret it. And come to some conclusions on it. But Alipay and WeChat Pay are both basically mobile payment systems, and Alipay was actually first set up as sort of a solution to a problem that Alibaba had in their e-commerce businesses. So one of Alibaba's main growth drivers for the last 15 years or so now has been a business called Taobao. And on Taobao, you've basically got individual people selling items to other individuals, and Taobao don't charge fees on that directly, but they, people can advertise their products and push them up the list in search results and stuff. And that's kind of how Taobao / Alibaba makes money. And one of the issues in the early days with Taobao is you would buy a product on that site, and then there'd be quite a level of trust involved in terms of sending money somewhere and hoping to eventually receive a product that you'd purchased online. And Alipay was essentially the solution to that. So it acted as like an escrow service where that money would be held until the product turned up, and then that money would be distributed to the person who sold it on Taobao, right? So that's sort of the origins of Alipay, and it's since been spun out into Ant Financial and become this sort of financial fortress doing a whole bunch of different things like money market funds, and they've got some lending programs and some other things as well. And the other sort of competitor, I guess, in the payment space, it's not really a competitor as I understand it, but the other one is WeChat Pay. So WeChat is obviously owned by Tencent. It's basically like the big social media app of China that everybody uses. Like I've got a friend that used to work in China, and even in the business that she was working in, like no one's using email or anything. They're like doing all their professional conversations on WeChat as well. Like it's just what people use. There's no Facebook or anything. And part of WeChat is WeChat Pay. So if you go out to eat or something, you can scan a QR code and pay with that on your phone. And yeah, as I understand it, basically everywhere you go, you've got essentially those two options. You can either pay with Alipay or WeChat Pay, as I understand it. And yeah, I don't have the user numbers kind of on hand, but the user numbers are ridiculous. It's basically anyone with a connection to the internet or that has a phone in China is a customer of probably or uses both probably Alipay and WeChat Pay. So I don't know if that quite answered your question, Karan, but that's how I'm sort of thinking about it or understand it at the moment.
Yeah.
A question for you guys. What aspect of the business do you think is most promising going forward? Like, where do you think your returns are going to come from?
I think it's obviously the main part of their business is e-commerce, and you've got Taobao and Tmall being the main businesses kind of within that, and you've got other sort of segments like AliExpress, which I've bought like rip-off GoPro parts on from New Zealand before, so that's sort of like the international arm or one of them at least. So yeah, as of today, like e-commerce accounts for most of the revenue.
It's about 80 or 85% roughly off the top of my head.
Something like
commerce.
that, yeah.
Yeah.
Yeah, it's a lot anyway. And I guess like I did a video a couple of weeks ago on how big I thought that particular segment of Alibaba could get. So Alibaba had an investor day in 2020 where they basically went through some of the targets they have in mind for over the next 10 or 15 years in terms of like I think what they call monthly active users, and they didn't necessarily talk about the average spend they want to achieve 10 or so years out, but they talked about the typical experience of a consumer that starts using one of the Alibaba platforms, and the spending goes up something like 4 or 5x in the first 5 years of that customer coming on. So I was sort of trying to do some projections and figure out how big I thought that e-commerce business could get. And I was landing on that business growing anywhere from like 8 to 14, 15% a year, maybe. That's a bit of a wide compounded sort of bracket over a long period of time, but that's kind of roughly where I landed on. But then you've also got this cloud business, which is a small segment of their revenue at the moment, but it's growing like 50% a year or something, and it's kind of only just getting to profitability. So the growth rates that I sort of came to on the e-commerce business, I think are like a base case for me personally. And then I think you potentially get a lot more growth from cloud and Ant Financial and so on as well. But yeah, interested to hear your guys' thoughts on the whole thing as well.
They wanted to double their user base, right, by 2036. It was 2 billion. That's the projection. That's the assumption, right?
Yeah, I'm not sure if it was 2036 or 2034, but somewhere in that range. Yeah, they basically want to go from 1 billion, which is where they're currently at. I think it's very roughly 800 million users in China, 200 million internationally, and yeah, they want to double that by somewhere in the mid 2030s. So if you get a double from the active users and you get, I don't know, a 3 or 4 or 5x, it's kind of how long's a piece of string in terms of what the average spend does. That turns into some pretty healthy growth rates over a decade.
Yeah, that's one thing that really appeals to me because it seems like it's really hard to lose money here. Like, if you just focus on the e-commerce business, forget about everything else, you're still probably going to see a good increase in the business. I'm saying the underlying value of the business. Yeah.
That's what I'm thinking too. Like your backbone is going to be e-commerce, and if anything else takes off, then that's kind of a bonus. But e-commerce is really going to remain your bread and butter, I'd imagine. I was actually about to look up how does it compare to Amazon? Like what percentage of revenues for Amazon or e-commerce versus AWS and their other services? Does anyone happen to know that? I'm looking it up right now.
I know for AliCloud compared to AWS, AliCloud's about 1/5 of the size. I don't know the specifics on revenue, earnings, or anything like that. But yeah, it's about 1/5 the size. So if you can assume they can do anything similar, then there's a long way to grow for really both of those aspects of each business.
Sure.
But yeah, I don't know the revenues off the top of my head. I think AliCloud makes up about 10% of Alibaba's revenue at the moment, or maybe slightly less even.
I got something from 2020, just like a quick breakdown. It was AWS was about 12% of their revenues, and that was about almost a year ago. So it's probably a little outdated, but just as a rough estimate, it's probably around there. We'll say 10 to 20%.
Yeah, the thing I find attractive with the cloud business is if you look at the American landscape in terms of cloud, yes, there are competitors, but it's sort of grown to the point where there's not that many competitors, and I think it's going to be really difficult for someone else to kind of catch up. You've sort of got like Microsoft Azure, AWS. I'll be forgetting some others, but there's not really that many options. And
there's a handful, yeah.
Yeah, and I think it's likely to end up similar in China, and I guess Alibaba and to maybe a lesser extent Tencent have got a pretty good head start to kind of get in a good position in the market. And I like that because you can then compare that to Alibaba's e-commerce business, which is potentially a lot more competitive. Like there's some aspects of Taobao and Tmall which have led it to be successful, but then you've also got the likes of Pinduoduo and JD.com, and Pinduoduo, for example, is not a very old business, and it's grown at like 100% a year. So it's kind of, as an Alibaba shareholder, it's I don't know if concerning is the right word, but it's kind of interesting to see these new players just pop up really, really fast, and be a potential threat to some of the e-commerce revenues of Alibaba. Whereas I don't think you are probably going to have as big a like competitive threat in cloud. Would you guys agree with that roughly?
You're getting at kind of like a first mover's advantage sort of thing, like that.
Yeah.
And they'll take a pretty consolidated stab at the market. So I'm looking at the U.S. stats just kind of to back up what you're saying a bit. AWS has about a third of the market. Next closest is Azure at 19% or 20%. And then the next closest after that is actually Google at 7%. So it's pretty fragmented after that.
That's almost identical to China. Off the top of my head, I know Alibaba's about 40%, Tencent around 20%, and the rest are structured around 7 to 10% range. So it's very similar.
But how mature is the cloud market in China versus the US? I think what Tom's saying is that it's probably a bit more mature in the US in that.
Oh, definitely. Yeah.
The 30% is more significant in that it's not going to grow, or maybe less significant. I don't know if that's the right word, but it's not going to like, the pie is not going to grow as quickly as it might in China. Given that you can probably say that about a lot of things in China, just in that they're developing so rapidly.
I think it's hard to make a direct comparison either way. Like, of course, it's worth making some comparison, but the markets are so different that
they are.
We can't rely on repeating what the Western companies have been able to achieve.
For sure. It's just kind of get a sort of ballpark frame of reference because this is kind of it's a relatively new space in the grand scheme of business. So it's good to just kind of have something to go off of. Not that it's going to clone it by any means.
Yeah, but there's very strong tailwinds, I'd say, for Alibaba's cloud business.
So
one thing that's
earnings.
I was about to talk about that as well. It surprised me that the commerce outgrew cloud over the past 12 months for Alibaba, which did surprise me because you would think the fastest growing aspect of Alibaba at the moment would be the cloud, but it grew at, I think I put it in a thread, 29% for cloud computing revenues whereas the e-commerce grew at 35%. So over the past 12 months, it's outgrown the cloud.
So
That's a
I
lot
dug
of-
into that a little bit. Yeah,
A
as
lot
to
of
why the
spending.
cloud revenue.
A lot of
Yeah,
spending.
it wasn't much about the spending. So the cloud revenue actually decreased because of TikTok. So
Yes.
ByteDance actually said that they're going to stop using AliCloud, and they're one of the largest users.
I didn't realize
So
it made
that-
that big of a difference. Wow.
Yeah,
I think the difference in growth would have been about a 42% number compared to a 29% number. So it was
Wow.
that's off the top of my head. I read that somewhere, but it was about a third at least of what they could have achieved if they kept ByteDance.
I did not know that. That's pretty nuts. Wow.
TikTok affects everything.
Yeah, clearly.
Yeah, I just
Yeah, you should
quickly
totally
pulled
get
up.
financial advice there.
Yeah, don't go there for financial advice. or here for that matter.
Yeah. Nothing is financial advice. We just have a good time talking about stocks. We like the
Yeah.
stock, or we don't like the stock. It's not advice.
There you
In
go.
the words of Roaring Kitty,
Roaring Kitty, yes.
we like this. We like the stock.
I just these numbers are from February, but as of February, TikTok had 1 billion monthly active users. So I'm not sure how that compares to like Instagram or Facebook, but that's getting
That's
up there.
insane.
Facebook's in the, aren't they like
2 billions, I think. Maybe nearly. Actually, I think you're right. I think it was about half the world's population.
that's nuts. But
Which
I wonder
is
how many are
insane.
actually active accounts, because there's so many bot accounts everywhere. But still, mind-boggling numbers either way. 1 billion's 1 billion. That's a lot. Even if you have that, half of them are bots. 500 million, that's still huge.
That does bring up an interesting point though. Like, are the US cloud businesses potentially going to be competition for the China cloud businesses? If
Not within
ByteDance does
China.
appear to use one of the US competitors.
I'd be surprised if they let that happen, because the CCP actually that could be a major benefit to Alibaba, in the same way that the U.S. government is a big benefit to all the big U.S. cloud businesses, because they don't want Chinese companies coming in. And we saw the drama with the TikTok scandal from a while back because of how they were sharing data and whatever. And I think you'll see that on both sides, to where both sides just kind of get their own side of the fence, I'd imagine. Though things could always change in the world of politics. You never know what will happen. If someone cuts a sweetheart deal or gets someone on the board and all of a sudden, okay, we'll let this company in. You never can really tell exactly.
I think that's an interesting thing about Alibaba is so much of their revenue comes from China. Out of their active or the annual active users, it's about 1.2 billion, I think was the most recent number, and 900 or so million of them were from China. So they really don't rely on much international growth whatsoever. They are starting to kind of reinvest into some things like Lazada, which is mostly in Southeast Asia. But really, they can just stay in China and do well regardless, just because of how fast that market is growing in general, and things like disposable income and the GDP per capita. We could really just see, I think Karam mentioned the users doubling by, is it 2034 or something they put out in their presentation?
Yeah, around that.
Yeah, so some long time out, but really, it doesn't even matter so much if that number grows. This year, the annual active users went up 14 million, which was about a 6% increase, but they still increased their revenues by 34 or 35%, whatever it was. So as long as the user starts to spend more money, which realistically should be the case for a very long time, on a GDP per capita basis, I think China's about 1/5 or 1/6 of the US. So assuming that can continue to grow, which really there's no reason why it won't. Not to say it'll catch up to the US or get that high, but there's still a lot of disposable income for those users to spend more money in the future, which is why the e-commerce business is fairly safe in my mind. I can't see them losing customers. It's just maintaining and slowly growing, and then them already existing customers to spend more money in the future. And then the commerce business is set.
That's where I think looking to something like Amazon is a good frame of reference. Like if you look at Amazon a few years ago, just look at the general trend with how incomes have been diverting towards e-commerce away from retail, the traditional brick and mortar retail. You probably see the same trend elsewhere, but then you have the added wrinkle, like you're saying, Frank, with actual economic growth mixed in at a much higher rate too, on top of the already increasing trend of people just buying stuff online more.
So, Frank, what was the user number you just said in China? 900 million?
It's close to that. I think the overall was 1.2. They're the numbers I remember in my head. 1.2 billion, about 900 in China.
Yeah, okay. So this is a crazy stat I've just pulled up. The number of people in China using the internet is 939 million. So basically everyone is using that has an internet connection is using one of the Alibaba platforms, and that's only about 65% of the population that have the internet. So again, pretty strong tailwinds, I would say.
The surprising thing to me in the Alibaba investment is a lot of my consideration is macro. I don't know how to think about that at this point, but I know a lot of the reasons I'm liking Alibaba is these macro considerations, which I don't like to rely on in my investments. How are you guys thinking about that? Are you really trying to ignore the macro, or are you enjoying the macro play?
It's kind of hard not to with the size of the company, in my opinion, because it's so big. It's getting to the point where broader. Someone said on the last episode, it was like you live long enough to become the market if you're successful enough. It's getting sort of that to that point. It has plenty of runway in any event, but I think it's definitely relevant. But it is kind of interesting that it seems like the major risks are completely outside of the company. Major risks and some of the major positives are macro focused. It's usually something political between the U.S. and China, or just within China. Those are major risks right there. But then you have major tailwinds as well on the macro side with actual economic growth that seems to have very few signs of slowing down anytime soon. So like maybe those just cancel each other out, and then you actually look at the company and you're like, hey, this is still pretty great. So maybe that's the way to look at it. But I think to your point, Frank, I'm kind of thinking the same way, that many of the risks and many of the tailwinds as well are macro oriented, at least that I'm focusing on, which I don't know if that's a good idea.
Well, the one person that's backing us up there is Dalio, and if anyone knows macro, it's Dalio, and he's betting on Baba, so that's one good sign.
That was why I first bought in, actually, because I was like, well, this guy's smart, and he's all about diversification, and he made a fairly concentrated bet by his standards into one Chinese company, so that says something.
And he's been visiting China for a very long time as well. I didn't realize how active Dalio was with China. I saw a picture of him over there maybe 30 or 40 years ago. And then when he's in the article he wrote on LinkedIn, which to me is still so random that all these articles are put out on LinkedIn, but he talks about being in contact with government officials and things like that. So it's interesting how involved he is in the country.
You get some clout when you're largest hedge fund, or at least one of them.
One of the biggest advantages that Alibaba has is that it's one of the companies that's, kind of bridging old China and like the modern China in a way. So it's brought a lot of people onto I think that's why there's the number of internet users is equal to the number of Alibaba users, because a lot of people have been brought to the digital economy because of Alibaba. They've started their shops, their living standards have increased through Alibaba's platform that's created.
It's part of the reason I think it would be insane for the CCP to really do something to disrupt Alibaba, as companies like Alibaba and Tencent, Pinduoduo, all of these tech giants in China are part of the reason they're becoming a developed market, and part of the reason why this GDP growth has been so high and can continue to be that way going into the future. I would find it very strange for the government to destroy that, particularly when the trend over the longer time frame of say 30, 40 years has been to improve that situation, and they've been very successful in doing so.
I think this regulation actually benefits Alibaba more than impacts it, because it's impacting a lot of the companies that have needed support, like say Pinduoduo or to some extent even JD.com. But Alibaba, I think because of the investments that it's made with its partners, so I think it was with China Logistics, was it? That they had made the investment rather than actually building out their own logistics platform.
Yeah.
They kind of invested in the company, and then their way of growing has always, I think, been their moat in a way. Yeah.
How do we go about valuing Alibaba? Like, what kind of runway are we thinking this company has? Is it to the moon, or like what are you going for when you're trying to put a value on this company? Because it's multidimensional, as we've been getting at. It's kind of many companies in one. Granted, the vast majority is in the e-commerce side, but still, there's a lot of pieces here to look at. Do you value them all separately? Do you look at the whole package? Is there synergy between them all?
I can start it simply. I know maybe Tom might dive in a little bit deeper or something if he wants to, but the simple way I'm expecting to get a return, so I'm just reading off a spreadsheet at the moment. If the core commerce business can grow at 15% over the next 5 years, and I really am thinking of this as a 5-year bet at the moment, I would like to hold it for a longer time period, but being such a large company, I'm only looking 5 years out for now. So say 15% for core commerce growth, cloud computing at 25%, which is pretty conservative to what it could be, and then the other aspects of revenue growing at 10%. That would give overall growth of around 15%, assuming that translates to bottom line. So we could see a 15% return just from the business growth. Multiple expansion is, I don't want to rely on multiple expansion, but it certainly is a lot cheaper than the Western comps that you could look at, like the Amazons, Googles, Facebooks, PayPals, all of those companies. So you could potentially get, say, a 3 to 5% re-rate per year over the next 5 years. Even if you don't get that, though, that's okay, because I think the business can conservatively grow at 15%. So around a 20% return if the multiple re-rates well, add in the buybacks, and you can looking north of a 20% return. That's probably the simplest way I'm looking at the valuation at the moment.
And that's over a 5-year term.
5-year term, and if you go, the longer you go out, the less I expect them to grow.
Yeah.
It gets harder to grow. By 5 years out, they're just going to be such a large company. Growth will slow, just like any other large company tends to do. But yeah, for now, I'm looking 5 years, and I think 20% is kind of what I'm expecting. Without a multiple re-rate, like maybe we just don't see the sentiment in China change, and it always trades at somewhat of a discount compared to the Western similar businesses. Either way, then I think a 15%, which is my hurdle rate, is what we should get. And that's not financial advice, of course, just my opinion.
Absolutely not. What about you, Tom? You said you had some thoughts.
Yeah, I actually see Jason, After Dinner Investors, in the chat. So we recorded a podcast and kind of got into valuation a bit last week. I've maybe approached it a little bit differently. So I've really put a lot of what Alibaba's doing just kind of in the too hard basket for valuation purposes. Like I honestly have no idea how big cloud could be. I don't really know how profitable something like their stake in Ant Financial could be. But I think we've got, enough data there to do some sort of valuation work on the e-commerce component of the business. So using those sort of like long-term targets that Alibaba had that Karan was speaking about earlier with, doubling their user numbers and also hopefully increasing the average spend as well. I've kind of used that information to inform just a simple discounted cash flow on the e-commerce business alone. And then when I run those numbers, like it's a reasonable amount more than the current market cap, just looking at kind of the e-commerce business alone, before considering the growth of the cloud business, which is really only just scraping into profitability at the moment. Like that's not bringing in any net income for them at the moment. And before looking at the stake in Ant Financial and so on as well. So the way I'm sort of looking at it is like you get a very reasonably priced e-commerce business, and then you get the cloud business and the 1/3 stake in Ant Financial for free. That's kind of the way I've approached it, I suppose.
That might be the easiest way to go about valuing, is just segmenting the business, starting with the biggest one, e-commerce. And if you're getting that at a reasonable price, you're getting the rest for free. That seems to be almost like a Peter Lynch style approach, in that, like, if you can isolate one thing, one particular asset, one particular segment of the business, and that you're getting that at a good price, then, well, you're getting everything else at a good price too, unless it's somehow hemorrhaging money, which it doesn't appear to be. So that might be a good way to go about it if you're trying to do valuation work yourself.
Yeah, the downside to that approach is, like, if it does moon, as Jack mentioned,
Yeah, right.
I got no idea what it's worth optimistically. Like, if it does go up a lot, I don't know how much a lot really is, and I really don't have like a framework or a price that I would sell at, like, in my head right now. I'm sure it's something that as these other businesses develop more and start to produce cash flow, and we can get a good idea of potential growth, maybe you can start to put some numbers around that, but I'm just not there yet, from that kind of top end.
Are any of you buying this instant, or have you been buying over the last few days, or planning to buy more?
I added to my position. Yeah,
Kron's always adding.
Always. Yeah. Last week.
I'm filming a portfolio update video today, so I'll leave that till
no
tomorrow.
Okay, no spoilers.
Interested.
Frank's
Guys,
gone.
would you sell out of any other
Alibaba.
holdings to buy into Alibaba? Any of your existing holdings?
All right, so this is going to give away my video, but I'll just.
I saw your post.
What I did.
Something cryptic. You posted something cryptic about selling something.
I have sold out of one of my microcap positions, not specifically to add in Alibaba, but more so for a personal situation that I needed capital for, and limited time to really actually research what was going on with this microcap company at the moment. I had higher conviction ideas that I decided to put that capital towards, and then I actually withdrew a fair bit of capital just because I couldn't use my personal savings for this situation specifically. So a rare, unique circumstance as a retail investor that I probably shouldn't be doing, but it's what I've done. I might regret it in the future, as I do still think the long-term potential of this microcap is good. But yeah, that's what I've done at the moment.
Frank
over
bought
the
a
past
jet.
week.
Frank bought a jet, so he got a write-off on
Been
the
watching
gains.
Grant Cardone.
10x Frank. Tom, what about you?
Yeah, I'm pretty happy with where I'm at in terms of my Alibaba weighting, so I don't have plans to add to it unless things got crazy and it just, I don't know, went down another 40% or something. I'd reassess. But
that would probably mean it got delisted somewhere. I would guess.
Yeah, you never know. Markets are crazy. I mean, it could be some broader market thing, like a March 2020, happens again. But
true.
Yeah, right now I have no plans to add. If we get a year or two down the track and it is still, as attractive as I think it is today, and I've saved up a bit more cash from my day job and all that sort of stuff, maybe I'll add to it. But yeah, no plans at the moment.
Fair enough. Shall we dive into some questions? So the chat is lively yet again. We love lively chats, everyone. So thank you. You make the latter half of these episodes especially fun because we never know what you're going to ask, and it makes for good conversation.
After Dinner Investor just said, "Did I sell Kelly Partners Group?" I certainly haven't, and it now makes up 50% of my portfolio, or 48% of my portfolio. So that's not the microcap I sold out of.
That's how it should be.
That's
how it should be.
Soon it'll be 80% and 90%.
It just keeps going up.
Like Brett Kelly. You're like you're like a founder with Brett Kelly right now.
Frank's
Sounds
a 40% owner in the company.
Sounds like something that requires the Kelly formula, I would say. So.
I have a Zoom call coming up on Thursday that I'm hoping Brett is part of. One of the CFO of the company actually reached out to me randomly after coming across YouTube videos, so I'm hoping I can speak with Brett.
It's because you don't realize you own 25% of the business.
I wish.
Fantastic. I look forward to that. if you get any good nuggets out of that are that you're allowed to share, of course.
I'm working on an interview one day, but I've tried and been rejected. But we'll see. We'll see going forward.
Interviews by CEOs are risky. You got to do those very carefully. Not for you, but for the CEO.
More so for him. Yeah.
Yeah. Way more for him is what I'm getting at.
He seems to put his thoughts out there pretty openly, like on Twitter, and he's got his own podcast. I reckon you could get him.
Let's hope.
Let's see here. This is not really related to Baba, but way up here. At the very first question we got, fantastic initiative, and I tune in every week for the podcast. Thank you. Tencent has pulled down over 30% recently. Has anyone done any valuation on Tencent instead of buying Naspers? That kind of goes back to that arbitrage situation we were talking about a while back. And that's pretty consistent with the broader market, like we were kind of saying, in that a lot of Chinese stocks have pulled back around that amount over the past however many months. Anyone looking at Tencent, or is all focused on Alibaba right now?
Process is very interesting, I think.
The process in Naspers arbitrage situation.
So they've completed that share swap agreement that they had with Naspers, and now we're actually going to probably see the impact of that, like in Q3 and probably Q4. So Tencent could recover, but I think in the shorter term, short to intermediate term, like we could see process definitely improve. And if the situation with Tencent also improves, it's going to be a huge boost, I think.
My main reason from staying away from Tencent at the moment, from the limited research I've done, mostly just to make videos and as a competitor to Alibaba, it does seem very interesting, but I just don't want to overexpose to China. I still think it's important to wait accordingly. There's definitely some macro risks involved that are in the back of my mind, but I don't want to overexpose. And now I'm looking at around 15% already in China. So if I added a reasonable position in Tencent, I wouldn't like that exposure to China.
People think that Tencent is kind of just the gaming platform, but their investment portfolio is kind of what will drive the business in the long term. Like they've got investments all over the world, so it's not really
hedge fund first.
Exactly, yeah. It's not a China first business, although yes, they do hold stakes in I think Pinduoduo and JD, and a lot of the other just e-commerce Chinese platforms, but all over the world. Like they own UMG, right? Like 20% of UMG. So global business. Yeah.
I want to keep hitting some of these questions. I'm trying to skip some of the ones we kind of already talked about, but here's one about William asks, what are your thoughts on Alibaba's approach of taking partial ownership stakes rather than full proprietary ownership of their subsidiaries, as in some of the big US tech names? That's a pretty good question. I don't know how to answer it.
I almost like that it's a more decentralized approach. It's not always the best thing to do, but they are removing some of the risk by doing that, particularly with their logistics and things like that. They keep their business capital light, kind of the opposite of what JD is doing with their logistics. I personally don't think it's a major pro or a major con. It's kind of just the way they're structuring their business, and I think that's fun.
Well, doesn't it add a bit to due diligence, though, and trying to figure out the management teams of those subsidiaries now and that they're different?
I guess you're relying on the management of Alibaba to have done that for you, just like you would
Sure.
if they completely bought out the company.
I guess
It's similar to what Berkshire does. They don't completely buy out every company as well. In some circumstances they do, but they just keep that management running that team anyway. So even if they fully owned it, I don't think it would change the structure of how that business was being run too much. I'm sure they are pretty active shareholders in these companies and force some things to be done, but overall I like that it's a bit more decentralized.
Yeah, and this is probably the main area where not with logistics per se, but as like a whole with Alibaba, that's probably the main area where they do differ from like being the China of Amazon, because Amazon the Amazon approach is just let's own everything, like let's have the warehouses, let's own the logistics networks, and Alibaba
the empire.
Alibaba has not done that. So they they don't hold any inventory and they don't have all the warehouses. They, just kind of collect a fee on advertising, almost like a Google model, and it's very capital light, and that sort of leads to the high returns on equity and so on, and the limited requirement to constantly raise outside capital for growth. So I quite like that.
I'd always think that that's a big competition threat, but then you see like Google as they've been like a lock on their business with advertising and search engine. Even though anyone could start a search engine tomorrow, it would probably have not even a fraction of the data that Google has at this point. But like, it really is just kind of about the data, I suppose. The data is the runaway asset. It's not the factories. It's not the whatever you build to do whatever e-commerce you're trying to do. It's really the data and the digital network you got going.
Mhm.
At least that's one
I
way to
think
look
also-
at it.
Amazon has also been kind of diluting a lot of shareholders over the years. Like, if you look at the share count of Amazon, it's dramatically increased. Compare that to Alibaba, it's not as much. So it's the outside capital part, the selling equity to raise cash. That's something Alibaba hasn't done, and I think they're a lot more conservative in terms of how they approach growth than Alibaba, because they want to survive for 100 years. The whole 3 centuries thing that they keep mentioning. So I think that's really a driving force with this company.
And the difference is in the margins, you can see. So Amazon's about a 5% bottom line margin, I think, off the top of my head. And I don't know what Alibaba is actually. It's closer to 30% maybe. I'd have to look that up to double check, but it's certainly a big difference by the business operation. So it's not a fair comparison in any sense, even when you're looking at multiples and things like that as well.
Right. And to that, someone also asked about margins. Love asked, margins are going down, which I mean, it's kind of hard to keep them up at 30% in just about any business, but competition's increasing perhaps. How do you think Alibaba can fight all of this? What's their moat, or competitive advantage? I think we're kind of talking mostly about, I guess, retail, because a lot of the other ones are kind of still on their growth curve, it seems like, or much earlier on in their growth curve. What's the big moat? What's the advantage that Alibaba has compared to any other large e-commerce brand or tech company, I suppose?
Well, you almost have to break this into like 3 parts, because, well, at least how I'm thinking about it is you have like e-commerce, you have cloud, and then you have and financial, and you can't just have like one broad moat for all of that, because it's a whole range of different products and stuff. I think one of the books that I've read that really helped me personally to try to get my head around Alibaba was what's it even called? Alibaba, the House that Jack Ma Built, by Duncan Clark. And actually, chapter 1 of that book is talks about this concept of the iron triangle, which Buffett followers would probably just interpret as being the moat of Alibaba, or at least of the e-commerce business. So they sort of talk about this like triangle working in sync, or I sort of think about it like a 3-legged stool, whereas if you don't have all 3 legs there, this whole thing kind of falls over, and basically those things are e-commerce, logistics, and payment systems. So we've already talked about like the Alipay sort of escrow system in e-commerce that's like really easy to use. There's no trust really required with, between the buyer and seller of a product. So that's an advantage. You have a really efficient logistics network, which has put out some like crazy goals for how fast they want to deliver products worldwide, which is an advantage. And again, it's you sort of relate it back to Amazon, where people love to be Amazon Prime Net members and get same day shipping or like next day shipping and all this kind of stuff. And then you have like just the biggest, largest e-commerce business in China, which has every product you could ever want from a buyer's perspective, and from the seller's perspective, you're not having to pay fees to list your products on Taobao or Tmall, because the way that Alibaba make money is from advertising. It's not from kind of clipping the ticket on the way through as you sell a product. So that's the way that I view the moat from the e-commerce business perspective. With cloud, like I say, we talked about a little bit, they've got kind of this first mover advantage. We'll sort of have to see how that plays out, but I think it's unlikely there's going to be 100 different successful cloud companies in China in 10 or 15 years time. And then with Ant Financial, Alipay is just kind of entrenched in the whole Chinese economy. So something that would be hard to reverse, I think. So that's where I'm at with the with the moat.
Just having over 900 million or whatever the active users are that they have kind of speaks for the moat itself. They have over half the country using their services in some way or another on a regular basis. So I think it's well established that there's a moat, at least in China, for Alibaba. Of course, not much of their revenue comes from outside of China, so they definitely don't have any kind of competitive advantage outside of China. Maybe somewhat in the Southeast Asian market, slightly. But yeah, I think it's fairly well established without even going into detail that there has been a moat for a very long time. Competitors definitely are going to cut away at margins. They're going to have to reinvest more capital back into the business for growth, which is kind of just likely to happen just because of the size of the business anyway. They just need to reinvest more capital. And you can see their margins thinning slightly over the past 5 years or so. And I think that's likely to continue. But if you assume, say, the top line is going to grow at 20%, maybe you can round down and say earnings will grow at 10%, or however you want to think about that number. But regardless, I think the bottom line grows even as margins start to thin slightly.
Yeah, I actually think margins, if you look, again, I think you have to sort of segment things out, but in the e-commerce business, I agree, margins are probably going to shrink over time. I think with the cloud business, you're probably going to see the
Yeah, you're
exact
right.
opposite. Like, you're going to have some operating leverage that starts to happen. If you look at a business like Xero, which is like an accounting software listed on the ASX, is like a classic example of that, where they copped a lot of criticism for losing money year after year after year as they grew, but the revenue was also always growing at a faster rate than the expenses, and at a certain point there's this like inflection to profitability, and then all of a sudden you keep growing and become super profitable. And you've seen that with, like, that's the I know a lot of people like bag software as a service businesses for having these ridiculously high valuations, and that is justified, I think, to a large extent. But in some cases, they can be justified if you pay like a huge multiple of earnings today, but it's on a very small earnings base that's going to grow a lot over time. I think you can just about justify it. So maybe you've got like the e-commerce margins coming down, but you've sort of got the cloud business like kind of pushing against it. It'll be interesting to see how it plays out in the overall company sort of view of things.
And I think at some point that will lead to a stabilization of margins, which is really what we want to see going forward. Assuming that they just don't burn capital through the cloud and it's a complete failure, which at the sizes is at the moment wouldn't matter too much now, but the more they put money into that, if it doesn't become profitable and we don't see that operating leverage, like you said, Tom, then that could be concerning. But overall, I think margins might drop slightly and eventually some point stabilize out as these other businesses start to become more profitable.
Speaking of kind of these other businesses, someone asks about Store X, Alibaba's clone of Costco. Any thoughts on that?
The honest answer is I don't think I've even heard of that. This is how many subsidiaries Alibaba has. Does anyone know much about that?
The way I understand it is Fresh Shippo is the overall clone of Costco in China. Store X being one of the Fresh Shippo stores opening recently, I think. It's very similar to Costco with the setup of the stores and everything like
a
that.
Warehouse.
Yeah, but you go, and the same walkthrough type model, but you go around and scan a QR code and then they deliver it to your house within 30 minutes or less is their business model. So it's kind of...
Isn't that kind of bizarre that you go to the store and then they ship it to your home?
Well, I guess because they're typically large products that you can't...
Yeah. It just
so
it's kind of mind-boggling.
It is. But yeah, it's a pretty cool business model. If it's anything, if they can operate it well like Costco, then that's just a huge another aspect of business growth we can see. But I wouldn't rely on that being the case, but it definitely is interesting to look at anyway.
Kind of like a free lottery ticket sort of deal. Unless they sink a ton of money into it, then it's not free, but it's like another chance. I
forget the numbers off the top of my head, but I think from the recent earnings that we saw, their revenues were maybe up 50% year on year for Fresh Shippo, or maybe I might be off on that, but that's the number that comes to my head.
That's
must
a low
be on
margin
a very
business.
small base, though, right?
Yeah, on a small base for sure.
And it's a low margin business that it really requires scale to really get there. So I wonder how that would go. But there's potential, but yeah, like you're saying, Frank, probably not worth like relying on it heavily in any sort of projections.
Do you guys know if Store X is the same as Sun Art? Is it? Because I know Sun Art. I haven't heard of Store X.
Don't know.
I honestly, I don't know. There's a lot of these little aspects that I don't understand, and I don't think you need to understand. It would be completely impossible. I think even the top management would not really understand every single aspect of these tiny subsidiaries that they have. But as long as you know that if you break it into these larger segments, like Tom kind of talked about with the iron triangle plus the cloud now, I think that's what's most important to understand.
Pivoting a little bit here, the good demographic question. We're talking about macro risks earlier, which was kind of took up a lot of time. How about another one? Does anyone worry that the Chinese are aging fast enough to become a Japan, where you kind of get this demographic reversion where the elderly population like substantially outweighs the younger population, which is not very good when the elderly population isn't working or can't work or is relying on like entitlement programs and transfer payments and stuff. Someone's got to pay those or otherwise make up for the production. And that's a big concern for a lot of developed nations now. China has the added wrinkle of the one-child policy and the legacy of that caused very significant distortions in their demographic chart. If you look at it, it seems like at some point we're going to get some pretty extreme sort of reversion where you're going to have a very large elderly population and a noticeably small younger population. Is that a concern at all? There's projections that seem pretty extreme on how bad that's going to be, but projections are projections. We'll see what actually happens. Is that a consideration at all?
So again, I think it's better we focus on Alibaba, the business, and focus less on the macro because we keep moving away. There's a lot of distractions in a way when we keep thinking about Alibaba. Like 421, we know that's a factor. That's something. It is going to make a difference. But I think as a business, because of how invested they are in other companies and other subsidiaries, like they're not going to get hit as bad because of that.
A wise Quran once said.
It is interesting to kind of see like some of the changes that China are making though. Like I know the Chinese government seem to have a lot of concern about just the cost of living in China, which almost certainly influences the number of children people sort of decide to have as well. So I think that was actually one of the, I must say I haven't done a deep dive on this specifically, but I think that was probably one of the reasons that we saw the drama over the last couple of weeks with the for-profit education businesses. Like that was one of the one of the big targets that that they looked at to try and drive down the cost of having children and so on. So don't know quite where I was going with that or whether it'll lead to anything else, but that's something I thought about while I was driving to get set up for the stream. So there you go.
I think it's good. Like in a way, they're kind of encouraging companies that are benefiting the local, the common person. And I think Alibaba is definitely one of those companies that improves the living standards of people and is going to contribute to increasing the GDP per capita. So
yeah,
that's why regulation is probably good.
Yeah, I don't think regulating commerce businesses is like, or consumer focused businesses is at the top of the priority list, I would say.
I'm just going down the chat here. Karthik makes the point that we were kind of saying earlier. I don't think anyone can completely understand Alibaba. It's so big. Mostly everyone might be cloning. That's probably the good semi-pessimistic way to look at it. And that it is very complicated. And unless you're a machine, it's going to take forever. I don't even know if everyone at Alibaba understands everything that Alibaba does at this point. So, as it's so many things going on. And really, you could say that about a lot of large businesses. So
yeah, you could say it about any of the major tech businesses that are just so huge at this point that you could really never understand each aspect of a Google, Amazon, Facebook, any of those businesses. And I don't think that's the most important thing, as long as you understand the key aspects of that business.
Yeah, I mean, I've interacted with businesses that have 500 or 1,000 employees, and you'd be surprised how often the left hand doesn't know what the right hand's doing. So I can only imagine what it's like in companies that big.
That's why you have management teams, like deep management pyramids of because you can't understand everything. You have to segment things off to run an efficient business. It's kind of one of the weird things.
I think
don't know.
Alibaba employs about 300,000 people, or it might be more than that in China. So it's a huge amount to manage and know what's happening.
Yeah, I think it's actually, I thought it was about that high, but I think it's close to 100,000. It's actually a lot
Okay.
fewer people than I thought. Because I was trying to make comparisons against some other businesses I'm familiar with, like Berkshire Hathaway, I think is around 400,000. And yeah, supposedly Alibaba's only like a quarter of that when I looked it up.
Okay, I might be wrong on that. I was looking at it when I was looking at GDP per capita growth and everything, comparing it to Australia's GDP, but
It's
Yeah,
so
I mean,
crazy just thinking of a company having hundreds of thousands of people. It's just nuts. So many
yeah,
people.
I know if you compare it to Amazon, like Amazon's got a ridiculous multiple of employees, again, because they own everything. So
Yeah.
Yeah.
I actually just pulled it up. Supposedly Amazon has, is that right? 1.3 million employees?
That's
That's
crazy.
My goodness. You're running a city. It's a full like major like huge metropolitan area. It's just nuts.
It's almost a country if you wear Tom's from.
yeah. It's a lot of Hamiltons.
That's literally about the population of New Zealand's biggest city.
Goodness. It's just that's insane. Anyways, Luis asked a good question. We're talking about you reallocating the portfolio a little bit, Frank. What prevents you from, or anyone, from selling out of other positions and continue to fill up the truck? You mentioned Seritage as well. Just, I guess, any holding in particular. What prevents you from selling off all your holdings to put it into your highest conviction one? Maybe that's Baba. Maybe it's something else. Diversification. Do we like that word here?
And no one seems to like Seritage anymore.
Yeah.
I guess I've somewhat done this, but mine's more so a personal situation. Typically, I wouldn't like to sell out of a position to buy into another one. Every now and then you have to do that, but I think that's more so with a fixed amount of capital. I'm still at the point where I can save enough money to buy into new positions, so I don't really have that problem yet. Yeah. But the more money I have, the more I'll have to reconsider the opportunity costs and things like that, I guess, and really having to sell out of a position. Because there are times where you have to make that decision. If one company's offering you a 20% return and the other's offering you 15%, maybe you do have to consider selling out. The problem is you're not always right on your projections. So there's the coffee can end of the spectrum where they would say never sell out of your positions. But then I guess some extremely concentrated people would suggest the opposite, where you have to bet big on your best ideas.
Yeah, I have pretty similar thoughts. At the end of the day, it's like an opportunity cost thing. Ideally, you can just have new cash coming in all the time and can just keep adding new stocks to the portfolio without selling stuff. But yeah, you may have to sell things, and I guess theoretically, at least, yeah, if something's offering 15% and you found something that now offers 20%, then you can make that switch. But of course, it's not always that simple because they're not known odds when you invest in a company. There's like a range of outcomes. There's tax considerations potentially, depending on your situation. And there's the whole modus propriety concept of, the mistress always looks hotter than the wife. When you've got the stock you've been holding for a long time, a new one comes along, it always looks quite interesting. But oftentimes it is in fact the wife that is hotter. So maybe you're best to stay put. And I also don't think you necessarily just have to pick like one stock. Like if you have a basket of say 5 stocks in a portfolio and nothing is obviously less attractive to continue holding than the other positions, you can always just trim across the entire group. You don't necessarily have to nitpick one company to free up some cash.
I usually put selling at the very bottom of the list for if I need money somewhere else. Partly because you mentioned taxes, Tom. That's a big one. Unless you're at a loss, actually, I'd be more inclined to sell at a loss just because it wouldn't trigger a tax consequence if there's a better opportunity somewhere else. But at least with how the market's been lately, it's over the last like a year, it's like probably most stuff is up right now. So you're probably going to trigger some sort of tax obligation of some sort. I would leverage a portfolio if it was really that attractive before I would sell, depending on the situation. Of course, I'm not saying that's like I'm always going to do that, but I want to avoid taxes as much as possible now because that will compound this early in the process. Having to surrender whatever percent towards taxes, especially if it's a short-term gain, that's a pretty healthy chunk. At least in the U.S., I know in Australia and New Zealand, it's different, slightly different considerations, but still kind of the same sort of game. Karan has a bit more of a luxury where he's at.
I've just got like a fixed amount, so that's how I think about it. Like I actually do have to sell out of something to buy into something, but like 40% of my portfolio is in cash, so I'm a little slow at even getting in. So,
yeah. And also to what you were saying, Frank, like my income is still significant compared to what my portfolio actually is, so I'd rather just wait a couple weeks to get another paycheck and then throw it in if I was wanting to buy something. Unless it was just so amazing the opportunity to go for it, then I might do something else. But it kind of depends on where you're at. If you're running like a closed sort of fund like Karan is, then yeah, it's a different set of rules, different considerations. Anyways, let's get another question. I can answer this one quickly. Did Wells Fargo, we mentioned them with fraud, they take any money from customers? Yes, they did. They were charging account fees for the accounts they opened for them. So that was most certainly a substantial fraud.
This has got to be the most common we've ever had.
Charlie Munger actually still holds Wells Fargo, right? Like he's still.
Does he?
Yep.
Oh, I think no, you're right. I think you're right.
20 or 30% of the portfolio of Daily Journal.
Because it's a large stake.
Still
I'm surprised he's holding on.
Oh, look at After Dinner Investor. These hosts don't need to worry about WePay, Alipay, AnyPay. When they're out with me, I pay as a thank you for the show. Well, thank you, After Dinner Investor. What a nice. Well, we appreciate your kind words as always.
We'll all have to meet up in Omaha one year, and Jason can take us out.
That'd be fantastic. If we're all in Omaha by chance, that'd be awesome. That'd be awesome in itself.
Well, I think there's usually something on in May most years.
At this point, is Jack Ma a pro or a con? Charlie Munger recently described him as arrogant and implied he deserved the pushback from the CCP when he disappeared. That was kind of a strange hot take by Charlie in that interview where he was saying that almost like that totalitarianism was like appropriate to like slap him on the wrist. It was kind of it was a very strange take that Charlie had there. But is Jack Ma a pro or a con? It's a good question. At this point,
go ahead, Tran.
I think he kind of toes the line a little bit of speaking out. He doesn't directly speak out against the CCP, but compared to what you would like a businessman to do in China, I think it is somewhat a risk. I don't know. Of course, he's been a great success for the business. He's done tremendous things, a bit like an Elon Musk, I guess, in that sense, where he's both a pro and a con at this point. But as Charlie kind of suggested, I think you would like to see Jack Ma speak out a little bit less and trying to.
It in.
You've really got to think of the CCP. I saw this on Twitter somewhere as the number one customer as a Chinese business. Your number one customer is the government at that point. You need to please them as well as every other stakeholder in the business. So
you could say that at least with a lot of tech companies in the US even, there seems to be some serious fears about if you don't control like certain hate speech, negative content, whatever it is on your platforms, then there will be sanctions. So like that's kind of appeasing government before appeasing customers. So you see a little bit of that even in Western countries. Not to the level of the CCP, but certainly that theme seems to be there. And maybe Alibaba's past that sort of visionary phase. They've gotten to the size that they're at that maybe they need more of an optimizer. I don't know if Jack Ma would be considered more of an optimizer. I always thought of him as a visionary. Granted, I haven't read his bio yet, or the house that Jack Ma built. I've not read it yet. So maybe it's just that it's now time to move to a different type of leadership now that they've gotten to the size they're at.
I think it's similar to what we saw at Apple. So Steve Jobs kind of was the visionary, and then Tim Cook was the operations execution person.
Right.
So same thing like Daniel Zhang, he's kind of the one that's optimizing the business, in terms of operations.
Yeah.
But I think in a recent interview, like when I say recent, I mean like 2-3 months ago, he mentioned that he does still talk to Jack Ma. So I think having that connection, like he's still involved in the business, I think that's a pro in a way, being the founder and so on and so forth.
Yeah. Rolling down this list here, I'm trying to pick a few more before we have to wrap up. There are tons of good questions in here.
Well, you're running the latest time schedule here, Jack, so I'm free to go as long as you want.
that's true.
Karan just woke up, so.
What percentage is Alibaba in your portfolio? You guys want to? Tom, do you want to address that or not?
Mine's small.
Yeah, depends how you measure it with including cash and all that sort of stuff, but 10 to 15% approximately.
I'll check mine right now and tell you the exact amount. But
I think I'm a little bit under 1% of my net worth because I have so much debt in there. It's kind of misleading to just use assets. Thanks to real estate.
Is that more or less than crypto, Jack?
I think it's actually less because crypto's run up so much in the last month that it's actually less now. It was more before, I believe.
More at cost.
Yeah.
Okay.
Bitcoin
definitely more at cost. Definitely more at cost.
So currently, currently I have 15.7% of my portfolio in Alibaba.
That's a big boy move.
I almost don't want it to be too much higher than that. I think once I get around, say it runs up in price, if it gets towards that 30% or 25% even of the portfolio, is about the arbitrary number that I'm thinking of. I don't want my exposure to be to China to be much higher than that, just because of the risks that are involved. But on a cost basis, I'm happy with that 10 to 15% range personally.
Yeah, and sorry, Karan, you go.
I'm at like 17.5% right now in the public portfolio, and I would add more if it goes even a little lower. I'd be fine with 20% on a cost basis. That's
including your cash in that public portfolio.
Everything. Yep. Yeah, so it's like a fixed amount. So 20% on a cost basis. Yeah, it's good.
Yeah, nice. Yeah, we've come back round to this a few times, but I guess that allocation will get probably diluted down a bit for me as I keep contributing to the portfolio. So that's kind of where it is now, but it'll probably, assuming there's no change in prices or anything, that it'll probably go down a little bit over time unless something crazy happens, like I said before, and start looking at buying again.
Here's a quick question. I don't know if we addressed it. We were talking about revenue from China. What % of Baba revenue comes from the US? Does anyone know that off the top of their head?
It would be very minimal. I don't know that.
Yeah,
and I bet it would all probably be within e-commerce, none of the other subsidiaries.
Yeah, have you ever used any of the Alibaba platforms, Jack?
I have, because I ran a drop shipping store 2 years ago for about a month as a test. So I used AliExpress and felt kind of dirty doing it. Drop shipping, for those of you who don't know, is a very simple business model where you basically build a website and link it to. You link a product from something like an AliExpress. You sell the product on your site, take the money, they'll then go and buy it from something like an AliExpress, and then they ship it to them. So you don't ever touch the product. And it's you could argue that's what a lot of like major retailers are doing, but in that case, like it just feels like a unfair sort of arbitrage situation and like taking advantage of impulse buying, and it's just a strange business. I did learn a lot about like Facebook ads and social media ads, but I know that is a very popular strategy with the drop shippers who will use some cheap AliExpress product and then mark it up a bunch of percentage points and then sell it on their site running ads to it.
Yeah, that's what I was going to say. I mean, I don't see why you would use any of the Alibaba platforms other than
No.
maybe AliExpress if you wanted to buy something really cheap.
Yep.
Or is it even, I think it's Alibaba.com, is that more of the like B2B kind of platform where you can buy like
I think
100
so.
hammers or something if you want?
I've never
That's
actually.
the only use it gets you here in Australia is for that purposes. Some businesses
Yeah.
will use it for cheap manufacturing, I guess.
Yeah, that is it's the same here. I'm googling it right now. Online
I just-
wholesale suppliers and so that's more
I-
for bulk.
I just looked at the revenue segmentation of their business. It looks like about 10 to 15% comes from international revenue. So the bulk of it really still is in China. And I would say a lot of that international would be more so the Asian market still.
Mhm.
So in the US, I'd say it's less than 5% for sure, but I don't know the exact number. It would be, I would say, closer to 1 or 2%.
Here's a slightly different question to change topics again to address after dinner investor with another good one. Questions for the hosts. What did you guys do for investing time this week? Did you watch YouTube videos, read annual reports, read books? Nothing. What did we do? I'm running around researching contractors for the new property I just closed on, and also do turn the unit I'm in now as a rental, get some new paint and everything once we move all this furniture out. So I was spending a lot of time doing that. Not much time actually reading. I'd like to do a deep dive on FRP holdings at some point in the near future, but I got to catch up on some work first.
Yeah, I just got off a earnings webcast, or was like halfway through it before we jumped on this. I watched a Joel Greenblatt lecture, which was great actually after Frank's recommendation last week. That allowed me to get a video topic also, which was great. And what else have I been doing? I bid on a house yesterday, so that was exciting. I got crushed, but I was in there for a little bit. So
Making moves.
yeah,
Making moves.
that's what I've been up to.
Was there any hope when you made the bid, or was it just like you knew it wasn't going to work?
Yeah, we got outbid by I think about 35 grand in the end.
That's
so
pretty substantial.
I think the even if we kept going higher, like the lady that bought it didn't look like stopping anytime soon. So that probably understates how much we would have lost by.
Frank?
This week has been the worst week for me. Last 2 weeks, actually, just been really busy with work. I've had very little time for YouTube videos, investment research, or anything at all. That's been a struggle with me, and it's partly why I've rushed into a decision, which might not be the best thing to do. But again, like I said, there were certain circumstances to do so. But mostly I've been paying attention to nothing but Alibaba for the past month or so now, dabbling in other things like always, but the bulk of my time's been spent trying to understand Alibaba. A lot of my contents have been around Alibaba, so it kind of doubles up there where I can kill two birds with one stone, I guess.
The infinite monetization loop, as it's often called. Film what you're doing anyways, and then react to yourself filming it, and keep getting that ad revenue. Karan, what about you?
I've actually been studying, so I've got an exam due like in September. So eToro kind of requires, so eToro requires us to kind of do this chartered wealth management certification. Yeah, so they're a little more strict now. So I've just been studying for that.
What's your strategy? Is what they ask, like, what's your strategy? Like, is it short squeeze lists, YOLO to the moon, or actually like looking at the company first?
Yeah, no, it's
that's actually kind of reassuring that they're doing some vetting.
CSI is the the whatever the education qualification that we need to have now. So we have to have level 3, level 4. And, we have to be like, okay, yeah, we're actually certified. We know what we're doing. Like, we're not just betting on random stocks. Yeah. So I've got the exam like September.
Is that a UAE specific thing, or is it all across eToro?
No, it's across the world. So everyone who's kind of like in the program has to do this exam. So I think anyone who's managing more than like 500,000 has to do that.
Is it a big time requirement for you to actually study for that, or is it just a minimal tick the box type thing they're doing?
Sorry?
Is it like actually time consuming, like a lot of study you have to do for this exam, or is it just a pretty easy tick the box type thing?
No, it takes like it's taken me at least a month and like I've been studying for the past month and a half or so,
Okay.
Wow.
and it takes around 2-3 months to cover the entire material. It's the material's okay, like it's nothing different than what you would find like CFA level 1 or like an undergraduate degree in finance, similar to that. Yeah.
I wonder if they're
Is there
getting
a
some
bun-
regulatory pushback then that would drive them to do that. Did they have anything like that before?
No, but they're trying to be, I think, more in line with, because they're listing in the US, right? So I think they're trying to expand, so they want to have sort of more professional qualifications in place.
That makes sense.
So that's why they're getting all of us to do this now. Yeah.
That because I remember you were saying like, oh, well, when it comes to the U.S., and I was like, I don't think it's going to come to the U.S. at least as is. But so that would make sense that they just kind of pivot, be like, you need to be licensed, and then you could do it or something like that. Yeah.
So busy studying for that. Yeah.
Well, go get them. I'm sure you'll do well, Karan, as a veteran investor at this point.
Surprisingly, most of the stuff that's mentioned, like in theoretical finance, you guys know, so different from what we actually face, when investing. So
Is it all efficient markets stuff? Modern portfolio
yeah,
theory?
actually, there's CAPM in there. There's the importance of beta. There's portfolio diversification. How do you have the efficient frontier? All that stuff. Yeah.
Lovely.
Yeah, and
Good
here I am,
stuff.
like putting 20% of my portfolio in Alibaba.
How dare you take away your badge right there. I think we addressed many of the big questions. I know we didn't get to everything, but we're at an hour and a half now, and we had a lively chat there. I think this was good. I mean, certainly we're going to be following this Alibaba situation over the coming months because it's not going to just stop now. So we'll keep a close eye on it and definitely bring your questions to next week's episode. We can maybe talk a little bit more about Alibaba, depending on what's going on in the news, if anything new or not, or bring it on into the Discord if you're not already in that. I think we're up to 200 members. I'm going to check real quick. Yeah, I think we are, or we're at like 190 something. So we're almost at 200 users. Let's get that up. If anyone's not in the Discord, go ahead and join it. It's free. It's down in the description. And you know what else is free? Smashing the subscribe button and the like button, because that will help out the channel and make sure that you don't miss any future episodes, since we put out a new one every single week. This time, wherever you're from, it's 11 p.m. here in Chicago. So it's about time to get ready for bed. And I will see you all next week.